На днях был очень интересный разговор в прямом эфире с Стином Якобсоном. Это главный инвестиционный директор Saxo банка. Стин интеллектуал, умница, профессионал. Так что разговор был очень интересный. И самое главное, мы обсуждали вопросы, которые вы же задавали, вопросы инициированы, собственно говоря, вами. Вот. Я думаю, что вам понравится этот разговор. Saxo банк наш старый партнер, старые друзья. Мы работаем, в частности, через них и, честно говоря, получаю удовольствие. У Saxo банка есть свой собственный телеграм-канал, между прочим, на русском языке. Называется Saxo Bank News. Так что рекомендую, смотрите. Там, вот, в частности, комментарий того же самого Стина на русском языке. Так что, друзья, enjoyте и смотрите наш эфир. Там очень много вопросов, вы знаете, касающихся, вот я повторюсь, но это важно, касающихся того, что будет после выборов президента, какие возможны расклады, кто выиграет, кто потеряет, какие отрасли, какие компании. Я думаю, вам понравится. Так что приятного просмотра. Удачи, друзья. Стин, first of all, let me thank you for your finding the time for the stream. I would like to tell that it's very good feeling to talk with very skilled and sophisticated man. And by the way, Steen, how many years are in the profession? How many years you are in this business? And what is your alma mater? Where you studied? Where received your skills?
So, first of all, I know I look very young, but I've been doing this job for more than 30 years, 30 years.
Oh, great.
Uh, and I like to say when I educate at universities that I never really had a real job. I've only been in asset management and trading, and I don't perceive that to be a real job. But my alma mater is the University of Copenhagen with a degree in economics. But let me say to your viewers that if it's up to me, no one should ever study economics again, because if this crisis has shown us anything, it is that there's a reason why that economics is called the dismal science. It's dismal and it's not even close to being a science,
Why?
because the model we used is based on model which essentially all was built in the 1970s. And as you very well know, today we have a faster moving market. We have a higher degree of psychology. We have faster computer chips. We have more correlation across asset classes than ever before. When I grew up in this industry, there was literally free money to be had from trading. Today, you need to run, NSA like computers to find anomalies. You are up against a crowd of retail investors who are playing a different game than you and I are playing. So I think today, if I should take a degree that matches what you need in the stock market or in trading, it should be 80% psychology and 20% math.
Maybe you have to be a doctor in psychology.
I think that would be a good starting point, to be honest.
I'm absolutely agree with you, absolutely 100%, because the knowledge of psychology, and by the way, specifically the psychology and psychology of the crowd, because this is the theme. Let's move to the main topic on the discussion. And today we are living through a very interesting period. In a week, a little bit more than a week, we will see the elections. So, by the way, have you seen this night the discussions between two guys?
Yes, I saw it. I think it was very close to be civil, which was a big surprise. And I think for my money, and as you know, I'm totally neutral in this election, I think Trump had a couple of very good pointers. One in particular being the energy sector, where he was able to make Biden look like he was going to take away votes from key states like Pennsylvania and Texas, which are fracking countries, because basically Biden was cornered into saying that on the energy side he would work for a transition, and that meant, of course, that there's going to be less focus and less help to the energy sector. And to be honest, if you look at the math of the collegial college in the US, Pennsylvania seems to be the one state that will be at the center of this election. So fracking
Absolutely
country,
right.
Pennsylvania will be, but overall, it was nice to see there was civil. I have to say, I know in Russia there is a higher degree of tolerance for people fighting with each other, but coming from a point of view which is that conversation and discussion is better than shouting. I think it was nice to see that they got down to business and talking a little bit more about reality. Mind you, American reality, not real reality.
You suppose that American reality and real reality is something, this is something different,
Very
a
different.
huge difference between them.
And I have to disclaim that I lived in the US. I worked for a number of US banks. I'm a huge fan of America, but I'm a huge fan of the America that believes in the individual, in the right of privacy, in the access to education, in equality, and in equal chance for everybody. That's not the America I see in the presidential debate, first of all, but it's neither the same society I see in terms of the capital market. I mean, a lot of people, and I may be getting into trouble here, but a lot of people like to say that opposite what US is China and Russia. To be honest, I think US is almost as autocratic for a Dane like me as Russia and China is. I don't think there is, in terms of the system, in terms of the influence, in terms of the narrative, I don't think there's a vastly different model. It's all state control, it's using the levers of central government in terms of fiscal spend and in terms of the central banks being the executor over the last 20 years.
Right. Okay, let's move to the stock market. And if you're not against, I would like you to ask very simple but very important for all our subscribers and for all the people that are with us now. Uh, could you please name two or three economy sectors what you think would be highest growth potential if Trump won the elections? And alternatively, if it might look that Biden became the next US president.
So if you run a number of correlations and the way that the polls have changed and use that as a decider on how you're going to allocate sector wise, it is pretty clear that if Trump wins, which I have to say is less than 20% likely, but who will benefit from that will be small cap stocks because there will probably be tax cut or continuation at least on a tax side, and it will be tech and oil and gas. Those will be the three selections I will do on a Trump win. On the other side, if I was to do bets on Biden, it will be the infrastructure stocks, which we've seen over the last couple of weeks has been flying. It will be utilities because of the green transmission element of utilities, and it would be green energy overall. That will be it. And of course, you know, the number one performing sector this year has been climate. Despite the fact when we started the year, everyone told me it is not feasible, it's not possible. It has been our overweight for the year, and I think it will continue to be an overweight, certainly under Biden.
And by the way, suppose that the chance of Trump is no more than 20% just now.
I, you know, again, I will disclaim that in 2016, I was actually on election night in Russia, and I had a great time with the election in Russia. And at the time, I was calling that Trump would win, not because I thought Trump was a better candidate, but simply because I, at the time, said Mrs. Clinton was the most unelectable presidential candidate I had seen in my lifetime. She was catering to minorities and the like. So in 2016, I had Trump as a call. I had the Brexit. This time, I don't really have a major call, personal or any invested interest in who wins the election. What I will say is that for me, whoever wins the U.S. election will not change the trajectory of the long-term return on equity. It will not change the dynamics of U.S. politics. So I think Biden is put forward as someone who will take America back to, let's call it normal, and Trump will be a continuation of support for the markets. I think both of them are utterly disasters in terms of creating what is needed in the US, which is reform, a green transformation, and putting America back where it belongs as the top innovator, as the land of the free and mighty, and a country that takes the immigration and the capital sources from around the world and make the best of it. I think America today is almost the opposite of that, with corruption in the universities, corruption in terms of the way they conduct coronavirus tests and the like. So for me, this is really a terrible choice between Biden and Trump. And think about it. We sit at a time where we need the most inspiration, the biggest hope, a new regeneration of the business model. And the choices we have is two guys, well, as they say in English, two geezers who are both north of 75-year-old. One is pre-senile and the other one is psychologically unstable. But I mean, I'm not against or for any of these two guys. I will tell your listeners that if you think Biden is going to be good for spending and a new America, forget it. If you think Trump is going to, go away even if he loses, forget that as well. I think the U.S. election will be contested, and I think the first 2 years into the midterm election in the U.S. will also be one of the most volatile times we've seen in the U.S. and globally since the youth revolution that we saw in the 1960s.
You mean anyway, Trump or Biden, but we will see the higher level of volatility, right?
Exactly. So the product of this prognostication is really increased volatility and increased likelihood of inflation, because they're both going to spend money. They're not going to do reforms, so it will be based on issuing more debt. That debt, in my book, will go, as we've seen over the last 6 months, directly to consumers through the central bank buying the issuance of the bonds from fiscal deficit. So we have what we economists like to call monetization. And monetization is far more powerful than the response we saw in 2008 and 2009, because that was entirely monetary policy. The what we call the printing of money. This time we have printing of money combined with fiscal spend. The fiscal spend, as we've seen in retail sales in Russia, Denmark, Netherlands, US, is being spent directly. Also because, the average Russian family and the average Danish family cannot go on overseas holidays. They can only spend less money. What do they do instead? They go online, they buy a bigger TV, a better TV, a better Zoom camera, and the like. So retail sales is effectively depending on that fiscal spend, and that fiscal spend will create a imbalance between supply and demand in the world, into a context of less globalization, more close borders, less immigration, more focused on strategic uh, operation by governments. Every single government wants to be in hand sanitizers, in masks, and everything that we were lacking in COVID-19. That's good. I'm not making any suggestion that they shouldn't, but we have to understand all of this comes with a marginal price of operation, which is significantly higher than the globalized world that we came from.
Now some words about losers. If Trump, which sector will be huge losers? Which sector you will never invest? And from the second point, which sector you will never invest if Biden will come?
So I think it's important for me to state the base case that I don't actually think election matters. I think in the short term, as you are addressing with the question, there can be your short-term upsets, can be short-term impacts, but overall, when we test for election years and non-election years, they have the same amount of return. So the sort of, if you were doing an equation for the future stock market, it isn't dependent on the presidential. But going understand what you want to go with the question, of course. So let me go directly to the question. Directly to the question, I think what will happen under Biden is pretty clear. He will try to control the platform economy, the attack that is essentially built into companies like Facebook and Microsoft and Google in terms of monopolies. And it's kind of interesting because as an investor, I love those three stocks. But as a person who believes in a libertarian market, price discovery, those companies are clearly an attack on the markets because they are a hindrance and an obstacle to getting new innovation. They are controlling by, buying competitive companies and the like. So I think Biden will be relatively bad for technology. I think inevitable over the next 4 years, there will be a minimum tax on every single technology company in the world. We've seen the OECD report come out. We have seen this concept of a minimum tax in every single country, which I think is only fair because we need to redistribute money from tax arbitrage into where you actually do the business. So technology clearly will be hit by Biden. I think to a large extent that you want to avoid that. And the rest you can really do okay because infrastructure and what he's promised is going to be okay. Under Trump, I think the only thing I can really think, I think Trump, has been good for the stock market. That's a fact because when you cut corporate
He
tax,
was good. He was
he
good.
was good. He was cutting into corporate tax from 26 to 21%. But it's kind of interesting. Trump, as I said, is known to support the energy sector and the banking sector. Do you know what the two worst performing sectors under Trump has been? The banking sector and the energy sector. So I
And
was,
this sector, I'm investing just now, I know.
yeah. So I would say if I think the future is an extension of the past in terms of Trump. I think if Trump gets elected president, I will still avoid the banking sector. I'll still avoid the oil and energy
Indeed.
because absolutely. But I agree with you. If we come to selecting, high return and potential alpha, I will be buying into the energy sector and the banking sector. But as an overall framework for macro, it is surprising that energy and banking did so poorly under Trump, under lower. But you have to remember, Trump's policy is a non-policy. It's a random sort of. I mean, he could just have a randomizer put out a dice that says if it's bigger than 3, I do this. If it's lower than 3, I do that. That's how he runs his policies. And in game theory, that's actually the optimal theory to have. To have, if I did that with my wife, I'm sure I had a happier marriage because I'm trying to figure out what she does. And to be honest, my guessing is worse than 50-50. So I'm going to use the dice example with my wife. I'm going to throw the dice when she asks me a question. So, Steen, do you think I have a big ass? Yeah, if it's bigger than 3, yes. If it's lower, then no. But the point here being that Trump's policy is just random. And the byproduct of that is that we will have more fiscal spending deficit and we'll have a more aggressive central bank, which means that the velocity of money goes down, which hurts the banking sector, and the energy sector will not have the ability to be part of the solution, which I think the reason that you also like the energy sector is because there's an underinvestment in the oil sector. That in order for us to have the absolute output of electricity in 2030, we need to use both the existing infrastructure of energy plus the new. So for me, it's inevitable, but I think you will do extremely poorly buying a banking index and an energy index. But inside the energy index, I agree with you, there are absolutely fundamental screaming value. Inside the banking sector, there is also fundamentally screaming value.
Have you ever read the Russian fairy tales?
Yeah.
Yeah? Do you remember a very strong man on a horse is looking for something, for some beautiful princess? So the road is finishing but very huge stone. And on the stone, you read, you are going right, you will lose your health. If you will go left, you will lose your horse. If you will go straight, you will lose your life. Frankly, I'm feeling myself exactly like in this fairy tale, because now this is the situation. And it's not important, Trump or Biden, but anyway, something worse will be. Are you feeling this the same? Are you feeling some shocks after the elections?
I think it would express itself as if you have a contested election, we can be all the way through into 2021 before we can decide who won the election, number one, right? We have the Supreme Justice appointee coming through, the setting up that sort of debacle that you go to Supreme Court. And I think it's important to tell your viewers that in the US, there isn't any precedence for transition. So, leaving the White House has always been done as a gentleman agreement. There isn't anything in the Constitution that states that on the 4th or that he has to leave or he has to acknowledge. There's no timeline. There's no procedure. So a lot of this stuff in American law has to go to court because you rule in the UK under English law on a standard laws of UK basis, which is that you have a precedent. So you need to create a precedent, and we can actually go to we can experience Supreme Court challenging to the outcome of the election. That's number one. But the outcome for me is that the economy is not going to be saved by any of these two. We're not going to fundamentally change anything. We will have a little bit of a 5% up or 5% down after
Right.
election. But what will remain over the course of the first 2 years is increase of social rioting in terms of increase in inequality. And through that and indirectly and directly, we will have higher volatility. So you can make 10% return in equity, no problem, but the return will come at a higher volatility. So your Sharpe ratio or your sort of the pain you have to sustain to get it. So I totally agree with your with your story and your analogy. I don't think there's any good choices. Also because we have used zero interest rate to inflate all of the assets that are supposed to develop more slowly over time. We are so far away from the mean regression of a 7% return in equity. Over the course of the last 3 years, we accelerated to 9 to 11 to 12-year average. The problem is that you cannot have a small chunk of the economy, being the stock market, outperform the overall growth of the whole society unless you have productivity or increase in demographics. And you know what? We don't have productivity and we don't have a positive increase in demographic. So ultimately, there is an economic gravity. It doesn't mean that we have to take flight and get out of equity and be doom and gloom, but we need to balance our long exposure with what I call fire protection, that being protection against inflation, volatility, which is, as you also indicate, one of the things I'm thinking is almost certain in this environment.
According to my point of view, sanctions against Russia then haven't even started. And the sanctions that we do see, it's not sanctions. It's some kind of kiss of princess, but not the sanctions, exact sanctions. You can compare it with sanctions against Iran, that Iran cannot sell, generally cannot sell his oil, something like that. So I suppose that real sanctions haven't started yet. How do you think if a friend of Russia, Biden, will be the next big guy, I will say so, in the White House? How do you think wouldn't we see the increasing of sanctions against Russia? And what kind of sanctions you will see, you can suppose. And by the way, don't you see that maybe in a year, maybe half of a year, foreign banks, European banks, American banks will start to close the accounts for Russians because I'm feeling the breath for myself that I'm toxic.
Mhm.
You will see, Eugene, you're a very nice guy. Your English is beautiful, but you're toxic.
Yeah.
So how do you think we will start to be toxic or not? Straight question.
Straight yet very complicated question. So let me answer in three parts. I think we have to consider what I call the nuclear option, which is taking Russia and Russian off the financial grid, which to some extent have already happened in Russia. As you know, the ability to raise money in the bond market is limited to a number of the state-owned banks in Russia right now and the government itself. But the nuclear option, I think, is very unlikely. Then let's look at the history of sanctions and the way that it, sanctions are constructed both in Europe and also in the US. And I think you have some analogies that you can use historically with China. So the way that an administration think about this is that if I'm going to do sanctions on a named country, in this case Russia, it is important that I don't violate or threaten the average Russian person. My sanction is not against the Russians, it's against the political elite of the country. So if you look at the history of sanction, it has classically been that people in the your case, if we talk directly here, is people close to Kremlin and Kremlin's alliances that has been sanctioned and internationally. Whether that is fair or not, I'm not going to comment on. I have no insight in that. But historically, as an observer, it's pretty clear to me it takes a lot for a government like the U.S. or Europe to increase the sanction against every single individual in Russia. So I think what I'm really saying is that the threshold to make things worse for you is very, very, very high. It really needs some international incident. And I think I'm not going to mention what we all know was an international incident a few years ago, but that was not enough to to create the increased sanctions on a personal level. What I think is far more interesting is the second part. I mean, if you feel you are a pariah, I also feel I'm a pariah. Even the Danish banks treat me like I'm a, I don't know which country, so I don't make anyone feel bad here, but I have to submit so much financial information. You know, they literally need me to know why I need 5,000 Danish kroner, which is like 700 euros, whatever, right? So I think beneath your question, there is this. Number one, I don't think there'll be additional sanction on individuals, but I do think the international network and the international verification, both in terms of tax, in terms of your personal identity, and your stake or your rightfulness to the money, is going to increase. So the paperwork will increase. What we certainly see in the banking system is that the amount of officers who work with on the security side and on the collateral side is increasing. When I joined trading, we were one trader and one person behind us. Right now, I think we have 15 traders in Saxo and we have 1,500 employees. Right? I mean, to be honest, I don't know what the rest of the guys do, but that's another story, and don't tell anybody. But
The same situation here.
so compliance is a huge part, and to part of me intellectually understand it, but I don't really see how the world becomes safer by having 1,500 compliance officers. But you need one smart one and a lot of data that you can analyze. I think that's the better way to do it. So I think a long answer to your question, one and most important for your viewers, sanctions on individuals are very, very hard to ratify and qualify. I don't think that will happen. It will need in international incident that is beyond what we saw 4 or 5 years ago, right? That was not enough to do it. So you all know what I'm referring to here. I just don't want to get involved in that conversation. And
All right.
but secondly, I think the international tax code, the cooperation on tax authorities, your amount of paperwork that you have to produce not to be sanctioned for other reasons than being Russian or Israeli or whatever, or Danish, will be based on that they want more and more information that to do business with you.
Concerning the compliance, I will be honest. I think that compliance officers, first of all, only them, they are ruling our system, not managers, not bankers. These very unknown people, they are ruling. Nobody can understand what's going on, but you can do nothing if they are not agree with this. And sometimes I'm feeling that there is some kind of bacteria that is eating the international financial system. Bacteria that wouldn't stop, and the bacteria that will eat the system to the end, to the last trader, to the last analysts. But it's my point of view, and every day I'm crying on this point. But anyway, look, if from big, huge things we will move to very small and very concrete deals. Tell me, please, with this week, what kind of stocks you will buy before the elections to be prepared? So you will buy, for example, some shares of gold ETFs, some shares connected to this sector of gold. Maybe you will buy something connected with some income facilities, or etc., etc., etc. Or maybe marijuana. I mean, Canadian companies dedicated to the sphere of marijuana.
And Biden has made indication that he's going to legalize marijuana globally. So marijuana, as a very small sector, certainly could benefit. I agree.
Concerning the gold, to buy gold before the elections. I mean, this week. I'm asking what shares, what sectors maybe it will be more comfortable for you. Maybe war sector, maybe something else. You will buy this week.
So first, I think it's important to say that that's not the way I trade. I trade as an asset allocator. So I built my portfolio to be able to withstand any shock to the system. So I'm prepared as it is, but I understand the general direction of your question. And if I look and assume that your viewers are pretty similar to the clients that we have at Saxo Bank, they will be 60-70% in equities. They will have, in the case of Russia, I've been to Russia, as you know, 150 times over the last 20 years, and I love the place. But I always get questioned about two things, which is the three things actually. It's always gold, it's always about the mining sector, and it's always about cryptocurrencies. So what your clients don't have today, which I have in my portfolio, which is I think it's the way to answer the question is, I have a direct exposure to volatility. And and you have to be careful because volatility is such a elusive concept, and volatility is, however, the only assets that are negative correlated to risk on. So in other words, during the crisis in February and March, when the market was in free fall, there was only one ETF or one asset class that did the opposite of the market, and that was being long volatility.
VX6.
Yeah, it could be VIX is the short term one. The way, however, mathematically to buy them is to buy what we call the mid part of the section. So there's a European ETF which is called VOL, VOOL. VIX trades in the very short end of the curve. The other one is not impacted so much from the roll, the negative carry that you have in VIX. But basically what I'm telling you is that the one thing I would probably keep the same exposure of equity that your clients and viewers have, but I will buy my fire insurance. I will buy, I don't want my house to burn down, but I don't mind spending 5% of my house value to insure it over the election. That would be number one. The second thing is that if Biden comes in or even Trump comes in, there'll be a huge $2, $3, $4 trillion worth of spending, which in my opinion, combined with what China will do in 2021, which is to also become stimulating, move into a phase of stimulating the economy, that will set off inflation. So what is interesting about inflation is that a lot of your viewers will deny there can be any inflation, because if we could create inflation by the business model we have today, we would have done it in 8, 9, 10. But as I tried to explain, this is different because we have the fiscal deficit combining with anti-globalization, with China-US trade war and the likes. But so I think what your clients are missing, or what a portfolio is missing generally when I meet people, is volatility, inflation linked, which you can buy through TIP, the ETF TIP, which is inflation protected treasuries, and then some commodity exposure, which I think most Russian client will have in one shape or form. Certainly, in my opinion, the best Russian equity that I would look for is, of course, in the nickel business and in the cobalt business and all this in Russia. So I think it's very natural for Russians to have that. But what
Native
everything,
speaker, right?
yeah, yeah. So a lot of what your clients and viewers are missing from relative to my long-term portfolio is volatility, inflation link, and commodity trending. That is what I will add in the last week going into the election.
The biggest worries of the central banks, of all the central banks in the world, is the deflation trap. So concerning the movement from deflation to the inflation period, how do you think? I understand that the question is very difficult, but
It's,
when
it's
we will
actually
see the process?
from a sort of economic side is not very difficult, because first of all, a lot of people who talk about inflation has no clue what inflation is, because you have an inflation curve, I have an inflation curve, every single viewer on this Zoom seminar has an inflation curve. But inflation is not a concept, it's a relative price change of some underlying random product basket, right? So inflation is not a mathematical, scientific, precise exercise. And just for the record, the 2% inflation ceiling that exists in the world today, I don't know whether you know this, but it's totally randomly set. Do you know how it was designed? It was designed by the New Zealand government in the 1980s, who at the time had a run rate on inflation of 10 to 12%. They then made an objective to get inflation down to 2%. They managed to get it down to 2%, not because, interestingly enough, of the action of New Zealand, but instead because Paul Volcker came into the Federal Reserve and tightened monetary policy and took monetary expansion under control. So ever since, from this random number of 2, has been used with no academic support, with no fundamental reasoning why. The fact of the matter is, inflation, as an economist, sometimes the equilibrium rate of inflation would be 4%, and sometimes it would be 0%. In an economy like Russia, with no demographic growth, zero inflation is actually good as long as you have net savings. That's why Japan has done so well. I just want to set that up because inflation is just an elusive thing. The second thing is that if we go back to the only experiment that we can really use, which is the 1970s, where we had the oil crisis in 1973, that oil crisis increased inflation. And everybody, 98% of everyone I talk to, thinks that the reason why we had high inflation in the 1970s was the oil crisis. The problem is it's only 25% of the total rise in inflation. So in other words, inflation went to 12% in the 1970s. Only 3% of that was actually oil prices year over year rising. The rest, and this is the kicker and the important part, the rest was inflation expectations.
Right.
And what is interesting is that inflation expectation, as you and I talk, is already above the 2% ceiling that Fed has in place. Actually, what we use in the market, which is something called the 5-year forwards, are trading at 2.2, 2.3. 30-year US Treasury bonds are rising in yield. It's now 1.65. 10 years are getting close to 1%. That doesn't make sense if you think there's a deflationary environment. So what the market does is that the inflation expectation, not the actual inflation, but the inflation expectation goes up. So the bottom line here is that inflation is driven by expectation. It goes back to your first question. 80% of inflation is psychology, 20% is realized. That's number one point. So it can easily go up simply by the fact. And by the way, you and everyone on this call has already accepted high inflation. Why? Because when you bought hand sanitizers and masks and got your online delivery and everything, you accepted price increases of 10, 20, 30, 50, 100%. So it's only a matter of adjusting. We were just getting so used to inflation coming down because of the monetary policy and because of globalization. What I'm now saying is that the way we conduct business with fiscal spend goes directly to the pocket of the consumer. That moves the supply and demand. And the kicker will be China, which is the only global central bank right now which is restrictive, which have a tight monetary conditioning. But remember, when you come to second quarter of 2021, Chinese numbers are going to look horrible because they have a huge stimulus in Q1. So like for like, they have a drop. So by Q2 next year, all central banks in the world is going to be printing more money, spending more fiscal printing and spending. So everyone will be synchronic. And that is by expectation alone will increase inflation. And the final point I have on inflation is that from a trading perspective, I talk to major family offices, sovereign wealth funds and everything. No one has exposure to inflation. And think about it, the money has to come from somewhere. It will come from fixed income, a deep, very liquid pocket of money in fixed income, the biggest market in the world. Now money is going to flow from fixed income into a bucket of inflation-linked bonds, green bonds and likes, which are much, much smaller. So I don't even need to be right about inflation to make money on this bet. Simply by the fact that people are going to expect it to happen will make sure that I trade less liquid products that has a higher propensity to go up through this exercise. So the point here being, don't talk about when we talk about inflation, we really talk about inflation expectation, 80% psychology, and by the way, they're already going sky high.
I remember the book of Soros. I'm speaking about the theory of reflexiveness, theory of reflection, because the Soros is asking us what's ruling expectations.
Exactly.
First of all, our expectations are ruling our life. He was talking about the shares, about the markets, but generally, I suppose that his point of view that in all our life, expectations are ruling, even
Yes.
in all the points. I will say so. Okay, let's move to another question. You told very interesting thing, and we understand that the business that will never die is printing. Chinese are printing, Russians not so, but also printing. Americans, it's their hobby. Even in the night, they're printing and printing. Finally, uh, all the printing, it's the increasing of the level of state's debt.
Yeah.
So my question is, how do you think? What is the critical level of state debt? For example, in Japan, we see 250 just now percent of GDP. So what is the limit? 300%, 400%. But we understand from this is the one point of view. Second, it's a low rates, very low rates. Because if you have a huge state debt, you cannot increase even 0.5% the level of interest. Because if you will increase, you will pay too much and you will lose your country. So what's the limit? It must be somehow.
You of course indirectly answered the question yourself, because of course the short to medium term limit to debt is only, and I mean that literally only, as long as the funding costs are lower than the GDP growth, you can continue to do what you do forever, because then the relative weight of debt to GDP is falling, right? So that's what we have been operating under the last 10 years. So people are saying Italy has, 200% of GDP, but the fact of the matter is that as long as their funding costs are smaller than the GDP in not in real terms but in nominal terms, then they are okay, because that will reduce the relatively debt to GDP. In practical manner, as long as the net coupon payment you have to do in your debt is smaller than the benefit of what you do is also the same. But if we look at it from a macro perspective, there are two ways to get out of debt. One is to inflate, which is the one you mentioned yourself, and the other one is to be productive. I mean, and I love people, I believe in people. I would say I have traveled around the world in the last 10 years, around the world 4 times every year. I've never come to a country where people don't want to be productive. I've never met to a country where people don't want to do the right thing. Despite this, all of this good intentions, we do exactly the opposite. We create more debt that goes to, not stimulus or innovation or education, but it goes to replace social transfers, war, whatever we do with this money. So we can inflate it away, which is what the central banks dream of. The problem with the inflation away part is that if we get to the 1970s scenario, we are going straight from inflating it away to a stagflation environment. And I think for the first time since the 1970s, we have an absolute risk of seeing a stagflation. So the better way to do it is by being productive and by operating a model that at all times asks two simple questions. Is it fair what we do for society? And is it productive? And I don't, maybe a country that does it like that, but I personally don't. And every year I've been to roughly 35 countries. But we really need to go back to the essence of economics, of why we are people, what makes us tick intellectually and as a group of people as well. I think where you have spend a lot of time, Israel, in some parts of the Israeli economy, you've been able to mirror that and do that properly. You have the highest amount of PhDs to population in the world. But there's a lot of other things, and again, I also love Israel, but a lot of things that should have been done differently, right? But we need to, and I think it's a positive message basically. The debt cannot be sustained forever, because if I'm right about inflation, then the nominal cost of inflation will go up and we'll break the model. I called it the K-shaped economy because there's some of the part of the economy does well and then a lot that does worse, right? The K leads to nowhere by definition. A K doesn't give you direction. It's actually very close to the analogy of the story you told, right? There's a crossing in the road, but it leads to death. And over here, you're losing your family and your wealth, right? So which one do you want? You don't want neither. But I think we end up in a situation where we all become more productive. We open our borders. We believe in immigration. We believe in people and whatever. And maybe that's because I'm blonde and blue-eyed and from Scandinavia. I believe in this. But to be honest, the only way we're going to survive is debt is a tax on future consumption, which is also lost on a lot of people. So when we initiate all the debt we've done in 2020 and prior to 2020, there's a huge tax for your children and my children, and in particular for our grandchildren, because they're going to carry forward this. That doesn't disappear. The last
How
time we
much
had
you have?
sorry,
How much you have?
how
Children.
much children? I
How
have
much children you have?
three children,
Britain. Oh,
and one
great.
grandchild coming next month. So, but the last jet jubilee we had was in 1914. Last time debt was forgiven internationally was between World War One and World War Two. So
Great.
we're not going to be forgiven the debt. We have to carry it. And credit by definition is forwarding future consumption to today. So the only thing we've really done in the last 20 years is to forward all the consumption to today, which means that you and I and our generation, we are really well off. But the biggest divide in society today is not between the rich and the poor, but between youth and people like us.
Not like us, come on, a little bit older than we are. Because, I'm 55 years old, and frankly, I'm feeling like a fellow just now. No, come on, that's so. By the way, Steen, very interesting question that is very important, by the way, also for me. Okay, Americans printing, and they are thinking only on one thing, that US dollar might to go down, down, down against euro, against Canadian dollar, and against Chinese currency, etc., etc. US pound as well. Okay, but from the second point of view, Europeans are looking on this process, and they are printing, printing, and printing, and they want the same, but they would like that American dollar will go up, because it's their policy, because everyone likes his um, export sector. Okay, and what kind of level of euro against dollar you expect in the case? By the way, do you believe in currency wars in 1 year, 2 years, and what kind of what level euro against dollar you see in this year and 2 years? So what is your expectation? What are your expectations?
First, from my economist position, it's pretty clear that the only way that you can express macro today is in currencies. That's the only thing left to play by itself. It's very low volatility right now, but one of the things I certainly expect over the next 3 years is increased volatility in the FX space, because it's becoming the only way you can, as you say, catch up or lose some of the competitive edge. If you look at the world today, there is fundamentally the issue that globalization led to a very stationary deficit and surplus map. So Europe runs overall a current account surplus of 3%, but inside Europe, Germany runs a current account surplus of 6%. Denmark and Switzerland run a current account plus of 8%. In a post-election world, if Trump wins, they're going to go after Denmark, Switzerland, and all these countries for having a surplus. And what is missing in the division of labor is the currency rate has not adjusted. The currency rate has been artificially in a race against the bottom to compete against each other. But if I look at from an asset allocator, from my proprietary position in trading, I'll say, if you think about what will help the world in 21 and 22, there's really only one thing that comes at a very low cost, and that is a significantly weaker dollar. Because the way a weaker dollar works into the global system is that it increases the liquidity, it loosens the fiscal tightness in Asia, in Europe, and everywhere else. However, as you say, ECB has historically been very concerned about a euro versus the dollar rate above 120. But I can tell you from conversation I have with central bankers in Europe and generally with people who are in that political game, there is a growing acknowledgement that if we were to say that the euro over the course of the next year went from 120 to 128, 130, that would be acceptable for the ECB, because the net dynamics of the rest of the world having an acceleration of growth through a weaker dollar would net on the bottom line be bigger than the loss on the currency rate. Do you know what I'm saying? So we have been very one-dimensional in our analysis, but the fact of the matter is that when the rest of the world outside Europe has a higher growth, we are the region in the world that benefits the most. So there is a sneaking, I will call it a slow-moving train inside the ECB and European politics that believes now that a weaker dollar, and in particular a dollar that gradually gets weaker, is very well healthy for everybody in the world, but in particular for us, because that will grow the size of our export market. So I think that is important to state. But I firmly think that we have seen going back to your debt question, I think the US debt is so big now. I think the ability to finance treasury buying at 60, 70 basis point is small. The net saving in the US is too small to operate under a domestic only buyers of treasury. So you need foreigners to buy it. Foreigners are not going to be buying dollar in the future. And if I can kick in an additional dimension, the PBOC, China Central Bank, has already launched a digital currency, the first government sanctioned central bank currency. It is in an experimental phase in China right now. But the good thing about cryptocurrency that also goes back to some of the other questions we discussed is, of course, that you have a very distinct code on where the money comes from. If you're in a crypto world, the governments everywhere will be able to know that you and I send money to each other, right? But it will also be a better way to do capital control, because right now you have almost a physical capital control. But imagine you had a digital currency in China. China could open the capital account, could make their own markets deeper. And for the record, China is going to be 60% of all IPOs in the world over the next 10 years. 60%. So if you want exposure to new company, new IPOs, you have to be in China. So we need better access to an alternative to the dollar. I think the crypto sanction government is the most interesting thing I've seen in foreign exchange in my time. So the long answer to a very complicated question: weaker dollar because it helps the world. Weaker dollar because there is a new growing belief that even inside Europe that is better than the opposite, which is a strong dollar but no growth in the rest of the world. And finally, I think we have to be very alert to the fact that cryptocurrency, especially if those sanctioned by governments, will take an ever increasing role in people's portfolio.
Concerning the cryptocurrencies, how do you like it? What is their future, and what future you expect to them?
So I have to admit, I'm an old geezer. I'm too old to understand a lot of this stuff. I have one advisory job in a very interesting think tank that does a blockchain thing, and I'm trying to get my head around it. But the problem, of course, is that for any currency, including digital, to become a legal tender, it needs to be sanctioned by governments. The birth of cryptocurrency was actually exactly the opposite. It was to get away from capital control, getting away from government, going away from being observed by state authorities. I think the only way it will have a success is exactly the opposite, by having an international tax code on blockchains or capital controls through cryptocurrencies. So I think crypto has a big future, but I think it's going to be something like the PBOC or ultimately an IMF SDR crypto. But I still see a big role for Bitcoin and everything else. And for the first time in my career, I'm actually allocated to, in particular, Bitcoin, but in a small way. But I feel if I have gold, I also need a little bit of crypto.
By the way, everybody are asking me, man, what are you thinking about the Bitcoin, for example? And I'm saying only one thing: nobody can understand the value, but the cryptocurrency is the intellectual answer for the question that we discussed 2 minutes ago concerning the compliance,
Exactly.
and the pressure of regulation.
Yeah.
If we do receive the huge level of regulation, this is the intellectual answer.
Yeah.
And if the pricing will go up and stronger, the price of cryptocurrency will go up. This is the question. Do you agree?
Yeah, I agree 100%. But I also think if we have the totally maybe naive conversation how a better world would look, it would be a world where all trade was done on a blockchain, so everyone paid taxes relatively on the accountability of it. There will only be one tax rate in the world on blockchain. It would be a global tax, because everyone would get their fair share, whatever belongs to Russia, whatever belongs to Denmark. Of course, it comes with a loss of privacy and everything else that traditionally has been built into crypto.
I'm not
But
happy with this, by the way.
no,
I'm
no,
not.
I'm not making a case whether I'm happy or not. I'm just saying, if you were to design a new world, that would actually be a brilliant world. And in terms of the other side of the coin, which is cryptocurrency as a legal tender and maybe potentially the only legal tender, taking away cash in the economy, then of course you can really create inflation because you can turn up and down the amount of issuance you have with no ability to hide in other assets for liquidity reasons. So I think what is interesting to me is in the timeline of cryptocurrencies that it started as a renegade anti-establishment project for good reasons, which I liked. But it's going to end up being the number one reason why government will get more control over capital flow, taxes, and intercompany pricing, and the ability to be non-dependent on Mastercard and Visa and Swift and all the other infrastructure that right now is at risk of being closed down for certain countries, as per your question on sanctions.
The last 10 years, the dynamics of all the indexes, I mean, American indexes were something like between 8 and 9, sometimes 12% per year. Every year, something like 10, 12%, plus minus. These are the figures. How do you think something will change in the future? I mean, something, what kind of future? 10 years, next 10 years. What will be the figures there? So the growth also 10% every year. We will see the huge crisis, something unbelievable that we will never seen before, or you think something that will be?
Of course, I don't know. Of course, I don't know is the real question answer, but let me put it into a framework. So there is the economic law of gravity in modeling expensive cheap and using something like price earning. Mathematically, if you pay the market right now, if you start buying the stock market right now at a P of 23, your expected return is smaller than if you bought it at 10 PE. That's just a mathematical truism. So does that mean, however, that you cannot have 5 or 10% return for a number of years? Absolutely not. Because let's take the in a zero, and in particularly, of course, here the premise is that we are in a zero bound or low interest rate environment. Let's take Microsoft as an example. I have a lot of clients who tells me that Microsoft, they see their Microsoft holding as a bond investment. And they see it as a bond investment because it has a yield of roughly 2% in dividend yield. It has a known cash flow for a number of years. It has no leverage on the balance sheet. And the discount rate that they use is zero. And of course, my counter immediately is that, well, that's interesting. But the problem with zero interest rate is that if you're very close to zero, you get infinity as your result. So,
Yeah.
in the case of Microsoft, with the model we use, I can't say whether Microsoft should be half or 4 times as expensive because it really depends on what I just described. What it is not, however, it's never going to be a bond. so because a bond and certainly treasury bonds are based on the premise that you have infinite ability to tax your population, right? So saying that these two things are the same is wrong. But of course, you get a higher return profile. The problem, however, just to put it into your question into perspective. So let's assume. So we agree that Microsoft could just as well be 4 times worth more than it is today in the present environment that we have. But then look at what will change the price of Microsoft. The simplest way to change the price of Microsoft would be for the discount rate to go from 0 to 1%. Then at a PE of Microsoft of 50, you will lose 500 billion dollars worth of capital, right?
Right.
And that's the way you need to think. So I'm not saying it's not going to be worth 4 times more. I'm just saying mathematically, we cannot have the same return because we need to get back to that regression mean that follows the real economy. So we can separate the real economy and the equity market for a long time. Equity market can outperform only if they have a higher productivity than the overall economy. That's why you see individual stock move up in valuation and some move down. It's actually their relative productivity that we are measuring and the willingness of us to pay for that productivity. But overall, equity market will always outperform the GDP growth, but it will not outperform by a margin which is as large as we have it today. So, in the short term, Microsoft could easily be 4 times worth more. But if I'm right
Four
about
times.
easily at zero, I mean, it's infinity. I mean, it's
Four,
value.
4 trillion.
It could
5
be
trillion.
it could be worth anything. If you think the Fed's balance sheet is going to go to from 7 trillion now to 30 trillion, which a number of people think, then it could be worth that. But that's not the point. The point is that your convexity, your risk of 1% increase in price becomes larger and larger the lower you are in interest rate. So if the discount rate goes from 10 to 5, the impact on the valuation of Microsoft is big, but not that big. But actually very interesting. If the discount rates go from 100 basis points to 20 basis points, it's a factor of 5. From 10 to 5 is only a factor of 2. So the velocity and the convexity of the move down in valuation increase significantly. So you are, in other words, you have huge leverage. It's like have you played golf? I mean, I'm a terrible golfer, right? So when I hit the ball, it looks like it's going straight to the flag, but the trajectory of my swing being wrong means that I'm going to end further from the pin when I started. That is exactly what you do in valuations, because you're pretending that today's and immediate past is your trajectory of your golf swing, where you're supposed to hit. But if the change is a minute change of the funding rate of Microsoft going from 50 to 150, it's massive on evaluation because you have to multiply by the price earnings.
And my last question. First of all, as far as I understand, you are a gold lover. Is it?
I don't think I'm not a much a gold
I
lover.
mean, not in the fingers.
No. I mean, I cannot compete with my Russian clients. They are far bigger. But right now, I have a huge allocation to gold, and I've had it since June of last year, which is 20% of my portfolio. That's correct.
And even just now.
Yes, I maintain a 20% exposure.
And when you will start to decrease the percentage of gold?
When everything we talked about today gets changed.
Yeah, I got. Steen, my last question, as I promised. So you have a choice: robototechnic, biotechnology, oil and gas, gold, and some kind of new facilities, by the way. So what you will choose? Or maybe space sector, or maybe something else. You have to invest. You cannot stand on the border and you cannot sit and do nothing. So what you will do? What you will invest?
I will say the energy sector and the green transformation is the most interesting, because remember, everything you done today, everything every listener on this podcast has done today involves the production of electricity. Electricity is the one thing that is constant in our life. Our demand for electricity continues to increase. I think it is the 21st century's biggest challenge to make sure we get closer to being working not against nature but with nature, but at the same time realize that we have a huge deficit in terms of replacing fossil energy. And to be honest, I think I love everything that has some volatility and some crazy people. And I know for a fact that the oil and gas sector is one of those. But I think of those you mentioned, I think bio is interesting. I think a lot of the other things you mentioned are interesting. But the one that can transform life, yeah, I could be part of the solution to make a more equitable, a more fair world, a more greener world, but respecting the fact where we come from in terms of the need to generate electricity. I will be wiser for it. I will be super keenly interested in it, and I'm pretty sure I'm not going to die, at least mentally, in operating in that field.
Steen, thank you so much for your time. And I will switch to Russian for 1 second.
Of
And
course.
I will say some words. Друзья, мне действительно хочется поблагодарить Стина. Он большая умница. И просто, вы знаете, честно говоря, я бы с ним трепался еще часа или 2, или 3, и я получаю огромное удовольствие. Мне бы хотелось сказать следующее. Стин, главный экономист, он управляющий экономист, он один из топов Saxo банка. Saxo Банк– это замечательная инвестиционная структура, и это говорю не потому, чтобы, скажем так, отрекламировать их очень сильно. Нет, я просто через них сам работаю, получаю огромное удовольствие. И это банк или это компания инвестиционная, она не только для трейдеров, не только для профессионалов, но и для начинающих. И там очень много продуктов, в частности CFD, которые, на мой взгляд, очень интересные. Стин, thank you so much. It was a really pleasure, huge pleasure to discuss with you. And I'm awfully sorry, but in some months, I think we will meet and we will discuss what we will do and what exactly changed. Because as according to my point of view, all our expectations, they sometimes are zero, because their life is more clever and more sophisticated, and that we cannot even imagine. So thank you so much. And only one thing, good health, very good health to you and to your colleagues. Thank you so much.
Thank you for my part. It was super interesting, and I wish you and your family and everyone on this broadcast a safe travel through the U.S. election. And I cannot wait to meet everyone in person again. I am tired of this lockdown. I'm tired of not being able to be a real person. But thank you for the very challenging intellectual questions. I hope I didn't confuse people more than I normally do. I have to say, I find very often in these intellectual and great conversations that I end up with more questions that I have answers, but I think that's what keeps us healthy mentally, isn't it?
We do have them. We do have them a lot. Thank you so much. Good luck. Good weekend to you. Thank you.
Thank you to everybody. Bye bye.